TradeFXDirect.com presents How to Invest in Emerging Market Currencies. You've all seen them, the emerging market currencies. You want to try them out, but you're stuck on whether this is a risk you're willing to take or not. The fear of the risk involved when trading unfamiliar markets such as the emerging market currencies can be justified, especially when you know little of the factors that affect such a market. There are ways to make the trading appear less risky though. The Emerging Currency Strategy Fund, CEW, ETF, is one of the ways that you can trade in emerging market currencies safely. It's important to note, however, that the CEW has a 0.56% expense ratio, which means that staying in it for too long could eventually eat into your profits. You should also be aware that the average volume is 42,175. Because the volume isn't very high, it can lead to very wide spreads, so you are advised to limit the number of orders you place. The timing factor. Most people who have tried the CEW have had issues with its limitations, namely its increased expense ratio and wide spreads. Therefore, if you're going to go down this route in trading emerging market currencies, it's very important that you do it at the right time. We all know how important timing is in entering a trade. Well, it's no different when entering the CEW or when entering a trade on the MetaTrader. Even as you choose the right time to enter the market, with the CEW you're advised to take a short-term position. This is to avoid the larger expense ratio taking away some of your gains. Why should you want to invest in emerging markets? With all of its shortcomings, which in truth are only two, there are several reasons why you should want to use the CEW to invest in emerging market currencies. We're not in any way making a case for CEW, we're merely pointing out the fact that you want to be investing in emerging markets, and it's one of the easiest ways to do so. If you've been following the news, you'll notice something peculiar about the differences in the emerging markets and the developed markets. Developed markets are raising their interest rates. The US and the Eurozone are in the forefront in doing so. On the other hand, the world's emerging markets, including Romania, Uzbekistan, India, Peru, Egypt, Turkey, Singapore and others, are cutting their rates. The cuts in their interest rates could mean that their currencies are struggling at the moment. This doesn't mean that you can't invest in them. The ETF will diversify the investment, so you're not investing in any of the individual currencies. The timing may not be right to tinker with emerging market currencies, but they are definitely worth watching. This is because they're showing tremendous potential for growth. Do you trade in any emerging market currencies? Let us know which ones and why in the comments section below. You were listening to a TradeFXDirect.com production. 100% sharing bonus and 40% power bonus. Unparalleled trading. Join today at TradeFXDirect.com.